Welcome to everyone who has signed in. We're glad and happy that you've decided to spend some of your workday with us. So we hope you'll enjoy what we have prepared for you as we move forward. This is our How to Get Consumers and Mortgage Professionals to Adopt Digital Tools webinar. I'm Kevin Nielsen, a marketing manager here at Finicity, and today we're joined by Matt Bradley, our Client Success Training Manager. Hello, Matt. We're also joined by Bobby Haering, our Client Success Growth Director. Hello, Bobby.
Hello.
And one of our account executives has hopped on. Hello, Bryson Partridge.
Hi, guys.
To get you, just as a reminder, we do have a live poll, which we will be referencing throughout the webinar. So down at the bottom, if you want to click on polling and answer the quick 5 questions, we'll be discussing that as we go through. But without further ado, we'll let Matt take it from here.
I'm going to go ahead and share my screen, and we are going to get rolling. Alrighty, again, big welcome to everybody in the listening audience today. My name is Matt Bradley. I am overtraining and enablement here at Finicity. I have the great pleasure of conducting this webinar today, and really the impetus of what we want to be going over is sort of drawing on some of the experience that we have here at Finicity for digital adoption, digital tools, and everything in the digital mortgage loan space. Over the course of the last 24 months or so that I've been in this position with Finicity, I've had the opportunity to travel the country, work with mortgage loan professionals, underwriters, loan officers, processors, mortgage loan consultants, mortgage bankers, a lot of different names for a lot of great folks. And what I've determined is that there are a number of best practices that we can institute from the utilization and adoption of digital processes. So with these best practices, just sort of keep in mind that these are our guide, right? These are the things that we have learned. And we're going to start pretty high level, and we're going to kind of then laser focus in on a couple of different points. But the first best practice that we've been able to pick up is that you know the difference between a digital and a manual process. Now, this may sound a little pie in the sky, and it may not make a ton of sense, but let's talk about it this way. When you're thinking about your job, maybe you've been in the mortgage loan space as a professional for a few years. Maybe you've been in the mortgage loan space for a few decades, right? What has changed? Well, I can tell you this. In a conversation that I had with a group of loan officers out in California just pre-COVID, it came out that a few of them had been doing this for 35 years or so. 35 years. Now, if you wind back the clock 35 years on the mortgage loan space and you look at the way that the job has changed, it really has gone from something that required carbon paper and hard copies and a lot of legwork to something that is more digital. So again, we here at Finicity, we call this the transition between a manual and a digital process. And this, as a best practice, is the first thing you need to understand and the first thing you need to know. So realistically speaking, if you're still not getting what the differences are, the best way that I have of illustrating the difference between a manual and a digital process is actually this right here. Now, on a particular Friday night, let's say you wanted some entertainment. What would you have to do in order to get that entertainment, say 20 years ago, or 15 years ago, or maybe even 10 years ago, depending on the part of the country you live in? Well, the answer was you'd have to go through a very manual process. If you wanted to get, say, a movie, you had to get up off the couch, you had to grab the keys out of the fishbowl by the front door, open the front door, lock the front door behind you, walk out to the car, open the car door, close the car door, put your seatbelt on, put the keys in the ignition, pull into reverse. I think you know where we're going with this, right? You're driving down the road, finally find that parking lot of that corner video store that you go to, get out, find your movie, back in the car, all of that rigmarole, right? A very manual process for doing something that we today can do with the click of a button. Because today we have a more digital way of getting this entertainment, right? Now, whether or not you use Netflix or Hulu or HBO, it doesn't really matter, right? The idea here is this. You have a digital transformation in a particular industry. And that has not only caused the consumers to do something very interesting, which has caused them to prefer that digital process, but it's also caused you as an individual to want more digital processes in the different things that you do, right? So we're kind of circling around a couple of different points here, but the idea here is this. The difference between a manual and a digital process is being felt seismically throughout this industry as well as in so many other parts of our lives. And if you don't understand the different advantages and the different ways in which these digital processes are transforming your own industry, you may be left in the dust, right? But there we have it. The difference between a manual and a digital process is as simple as the difference between Blockbuster and Netflix and how you get your entertainment. Let's go ahead and take a look at a poll question. In your experience, who is more reluctant to use digital solutions? Either A, the people in my organization, or B, my customers. Kevin, do we have an answer for this one?
Yeah, so as of right now, with 17 responses, customers is in the lead at 59% to 41% of people in my organization. So
okay.
That's the feedback.
So there we go. We've got some feedback there. Interesting to note, right? Customers maybe being more reluctant. Sounds like we have some good digital innovators on the call today. In my experience, when I have doled out this particular question, usually the answer is a little bit on the reverse, if not a little bit closer to 50-50, meaning that generally speaking, as loan officers are going out or as underwriters are going out, they're finding that the front-facing point-of-sale systems, the digital solutions that they're instituting, are more widely recognized by consumers and a little bit less so by maybe their own peers. But there is a lot of wiggle room in this particular question and a lot of wiggle room with regard to the type of response that we could certainly get. Good to know that we do have some digital innovators on the call. Happy to have everyone on. The good news is that we always know that there will be people that are going to have objections to these various processes that we're talking about. And for those people on the call that are concerned that their consumers are really the bigger laggards with digital innovation, we're going to be going over some tips and tricks in just a few moments here, a couple of best practices down about how to get those customers in line with your particular organization's vision and how to help you utilize those digital tools. Best practice 2. So knowing the difference between a manual and a digital process is one thing, but understanding the advantages of a digital process over a manual process is simply key in understanding and making headway with those consumers that you're having problems with. So talking briefly about what are some of the borrower pain points that we're seeing in using a manual process, right? And then diving here momentarily into the advantages. Well, we know that from data we've gathered from the GSEs that about 16% of borrowers that are using a non-digital process are having to resolve credit report issues. 18% are having to redo paperwork because of delays. 58% are having to provide follow-up requests for documents, right? We know that a huge part of digital innovation in closing loans has actually been to go paper-free, right? So whenever you're not doing that, you're running into that same problem that you used to have with going through and losing papers or maybe misfiling something, right? And we also know that 24% had their closing date delayed. Again, a very catastrophic number. If I am a loan officer and I have an incentive tied to closing a particular loan, and 24% of the time when I'm using a non-digital process, my closing date is delayed, that means that my commissions check is essentially delayed, right? That means that for me, for myself, the things that I'm trying to accomplish financially, those goals that I have professionally, right, they're being stymied by virtue of the fact that those digital processes are not being used. So taking a look at digital advantages, we know that there is no paper chase. There's no second request. That's one of the biggest sellers that we have. We know that people using digital means are closing loans within that 30-day mark, right? That golden standard of closing that loan within that 30-day mark. We know that that's happening pretty exclusively, right, for people that are off of paper, right? People that are using those digital solutions. We actually know that digital solutions are providing a reduction in fraud. It's very interesting to say, right? We're sort of moving off of the idea that anything to do with paper, cash and check, for example, those types of transactions produce a lot more fraud than a lot of the digital innovations that we have currently on the marketplace. We've also got a better customer experience. Listen, if your customer is going through or using a point of sale system, there's not a lot of back and forth necessarily, unnecessary back and forth, say, with yourself or your underwriters. We know that it is going to provide the better customer experience that they are looking for. And then we've also got elasticity, right? So you're able to manage your front and back end workload a lot better. Again, just a few of the digital advantages that we've highlighted. I'm sure that you can probably think of some personal examples in your life and in your workflow that you've seen be affected by this. So best practice number 3, again, understanding the advantages, understanding the differences between digital and manual workflows, manual solutions is one thing, but actively introducing those digital solutions that your customers want into your workflow is key. The reason why I bring this up, right, is as follows. Getting back to that video example. So interestingly enough, a lot of us, when it comes right down to it, we have digital solutions at our fingertips. I'm sure that there are some people, this is a pretty open webinar, right? And so I know that there are some people perhaps that are looking for a digital workflow or digital solution. Maybe they're on here just sort of seeking out what Finicity has to provide. But there are a certain percentage of us right on this call today that do have access to those digital tools and those digital solutions. And the interesting thing is, right, that a lot of us are choosing maybe not to utilize them. I happen to live in a beautiful town called Springville, Utah. Springville has the distinction of being not only beautiful and having a beautiful canyon right up the road from where I'm living, but also it has the only video store left in the state of Utah. The reason why I bring this up is this. Getting back to Blockbuster and Netflix, I personally, unlike maybe a lot of you, I have the choice of whether or not I want to go through a manual or a digital process in order to get my entertainment every night. I can actually get in my car and drive over to the video store, right? Now, here's the trick. At the end of the night, whether or not I go out, drive around, grab that video and come back, or simply sit on my couch and press a few buttons, at the end of the night, the result is still the same. What do I mean? At the end of the night, I am still watching a movie, right? Now, your consumers have a desire for all of those digital advantages that we mentioned. They want a faster, better experience. They want a reduction in fraud. Unlike a lot of things, you, as a loan officer, probably have the option of utilizing a digital solution or going through a more manual process, just like I do with my entertainment. Now, it seems crazy to me, right, that anyone would choose to go through a manual process. But oftentimes in our workflow, we are reluctant to introduce new things. We are reluctant to give the customer what they want because, hey, you know, I'm a loan officer. I've been doing this for 10 years. There's a new solution on the table. It's fine, but I know my process, right? I'm a total straight up cold killer at closing loans, and I have no interest in changing my process. The reality is that your consumers want you to. Your consumers want you to drive them towards these digital advantages, right? Because they have seen it. They have seen it in other aspects of their life. We also know what happens when change is inevitable. We know that we have things in this particular space, in the mortgage loan space, that are advancing. And we know that some people are going to be resistant to change. Some companies, some loan officers are going to be resistant to change. Well, unfortunately for the rest of us, right, Blockbuster was resistant to change. Actually, if you know the whole story, they just changed too slowly, right? They were on a brick and mortar. People trended away from that. They wanted something different. And so what happened to all the Blockbusters? Well, they became something different, right? Blockbusters around the nation shut down, and they were co-opted. They were turned into different businesses, and eventually Blockbuster went the way of the dodo. It's fair to say that we all have seen different instances of things like this in our lives. Instances of the fact that we have some people that do not innovate, some companies that do not innovate. And we know what ultimately happens to those companies. Your clients want you to institute these into your workflow. And we here at Finicity want to make sure that you have the tools requisite to stay competitive in this marketplace. And that's really all that digital advantages and all that the digital revolution is about. Got a poll question. Speaking about being digital innovators, right? How comfortable are you with the digital solutions you currently have? I've got a couple of different answers here. Kevin, do we have an answer for this?
Yeah, so it's basically stacked rank as you see it there. Very comfortable, 42%, comfortable, 32%, neutral, 21%, and uncomfortable, 5%. So somewhat aligns, right, with the customers being the ones who we're concerned about. But yeah, that's where we're going.
That's great. That's great. Again, great to hear that we've got some digital innovators on the call today. So key, so important. So a certain percentage of my employment here at Finicity is simply training individuals on how to use their own point of sale or their own loan origination system, right? So very cool to hear. Interesting that we've got, a few people that are saying maybe that they're uncomfortable or a few people that are in the neutral category. From a learning and development perspective, let me just say this. If you have a vendor, or especially if you're a Finicity client, right, in this case, and you're finding that you are uncomfortable with certain aspects of your own company's technology, right, let's get you up to the comfortable status. And if you're comfortable, let's get you up to very comfortable, right? Let's ensure that hand in hand, we can service loans better and we can service our customers more efficiently and more proactively. So very cool, very, very cool to hear. So again, really important to know that throughout the understanding that 40% of everybody seems to have on this call seems to have is very comfortable with using their own technology. Training too, right? That technology is key, and understanding it is key. So the idea here is that within Finicity, we provide a certain set of solutions. And one of the things, as we were talking about what to kind of include in this particular presentation, happened to be, well, let's give everybody sort of a peek at how we here at Finicity would make a loan officer and underwriter, right, strong in understanding the digital experience for the client, right? Because we are experts, obviously, at a certain number of things, but we are experts because we have products and services that we provide to you. So if I am trying to make someone an expert, right, in the digital experience for the borrower, and maybe there are some decision makers on the call today, or maybe there are just some interested loan officers or underwriters, and you're curious and you want to be able to explain things to your client, but you're not exactly sure how. Here's how. Here's the trick about how you understand, right, the borrower experience. You go through the borrower experience like this. So we here at Finicity do verification of assets quite often enough. For verification of asset solutions, we have a couple of different ways of going about it. But initially, the borrower will go through, click on terms and conditions. The borrower will then, in order to verify their assets, find their bank in our digital solution. They'll go through, enter their username and password, banking password, into this particular portal, which will then allow us to make a tokenized connection with their bank. Once we make that tokenized connection, we're able to go down, and you can see here, right, that the borrower will have their checking, their rollover accounts, brokerage, 401k, whatever have you. They can select or deselect those to add them to their verification of assets report. They can search for more banks or save and continue. And in this case, when they save and continue, they're finished with the experience, right? So again, understanding that digital experience for the borrower is key, and the best way to do it is to go through the experience yourself. I don't know how many times I've talked to loan officers and said, you know what, sit down, go through your own loan origination system from the borrower's side, right? Talk with your training professionals within your company. If you don't have one, talk with your IT professionals in your company. Tell them that you want to go through, you want a dummy account for your own loan. You want to be able to preview it as the borrower does, so that you can readily understand those concerns, right, that we've already highlighted this group has with their consumers. along with that, wanted to ask another question. What % of the time are you closing loans in 30 days or less? Kevin, do we have an answer for this one?
That we do. So the majority are below 50%, and so that's 53% of people say they're doing it, less than half the time. 26% say they're in the 50 to 70% range. 16% say they're in the 70 to 90% range, and 5% say they're in the 90 to 100% range. So
It's that one person on the call that's just spoiling it for everybody, isn't it? That's right. That one person. Well, we applaud everybody's great efforts. Again, closing loans within 30 days. As I'm speaking with people in the industry, and perhaps maybe another question we could have asked is, do you feel that closing loans within 30 days is a priority? I can tell you that working with the biggest players in the industry, all the way down to sort of the mom and pop shops, both here locally and in other states as well. Really, the sense that I get, from the rumble that I get from the ground is, let's stay competitive. I've heard this so many times. Let's stay competitive. Let's get those loans closed within 30 days. I will issue you this challenge. If you are one of the individuals that is on this call and you are not closing loans within 30 days, we need to have a talk. Right? We need to have a talk about your digital solutions, your digital adoption. If you're not already using some of the services, right, that Finicity does provide, we can have a whole separate conversation with some of our account executives like Bresson about that, right? Because we can absolutely close that gap for you here and make sure that those loans are getting closed within that 30-day period. Speaking with loan officers across the country, I understand that there are a lot of challenges, and it's difficult to close loans at a high clip, at a 90 or 100% of the time, just because you do have individuals, as was expressed on this call, that are going to be reluctant to use technology, that are going to be reluctant to close things faster. And then aside from human error or human reluctance, you've just got sort of fate, right? Like maybe somebody who's applying for a loan needs to wait for additional deposits or credits or things like that to their account, or verifications, or maybe they're having trouble gathering the requisite paperwork. It's all very difficult, but again, shooting for that goal, shooting for that loan close in 30 days. So one of the things that we like to highlight as well is, with the digital technology aspect and going through and understanding what the borrower is going through, as far as a best practice, that you understand the result of the client's digital journey and you understand the value that it adds to their loan. So again, speaking to what we know here at Finicity, one of the things that one of the things that is produced, right, from the borrower experience is this very same verification of assets report. Now, if you don't understand the value, right, in what it is that you're trying to get, you're not going to be able to utilize it correctly. For example, you can have a borrower go through the digital experience, but unless you can really pull out the value from that, you're not going to be closing that time, gaining that traction from the 30-day close, right, that you would have normally done. So, for example, if you're used to seeing regular bank statements and you haven't ever seen a verification of assets report from Finicity before, here's what sort of the end product looks like, right? We've got demographic information up at the top. We've got total asset summary. We've got asset summary by account. And then we've got transaction history down below. But up in the right-hand corner, we've also got a report ID. Now, this report ID is integral, and it is the thing I think that often enough our loan officers that we service here don't quite understand, right? That report ID is going to go into the GSEs, typically through the loan origination system, and it is going to provide a certain amount of certainty from the GSEs, right? Day one certainty in particular. It can be attached to the 1003, right, for these purposes. And what that's going to do is it is going to guarantee that this loan is going to be pushed through and that those assets, right, are going to fall into that day one certainty bracket, which will then allow you to close that achievement gap, right? Talking again about that 30-day period, to close that 30-day period achievement gap for you and your loans. In addition, right, it is going to give you the needed information for your underwriters to make those closing patterns more efficiently, right? So this is the value. This is why, as a Finicity employee, right, why I'm going out and I'm talking to loan officers and I'm working with them and I'm trying to get them to understand, okay, here is the value, right? Here's the value in changing your workflow. Here's the one-to-one correlation. And talking about verification of assets, employment or income is one thing, but if you're not understanding this equally as much for your point of sale or your loan origination system on the back end, you're doing yourself a disservice, right? So we have to understand this value. Poll question, which is of greater concern to you? A, pitching digital solutions to the customer, or B, using digital solutions? I think I know the way this one is going to go, but Kevin, how are we looking on this one?
So this is very similar to the first one, right? So 63% is pitching digital solutions to customers is their greater concern, and 37% is using the digital solution.
There we go. I think with this question, one of the reasons why we like to ask it is, again, quite simply to understand where your mindset is. And it sounds like if the bigger concern is pitching over using, right, it sounds like the battle that we need to really fight and focus on is kind of what we prepared for here in these next couple of best practice slides. And that is really prepping the customer, right? Really kind of massaging them and getting them to understand the value maybe that you recognize within these digital solutions. So best practice number 6, you make the client aware of what to expect in a digital process. So we're talking now about sort of best practices with clients and how to kind of get this into their foray. So if you're one of the people that is really struggling with pitching a digital solution, again, is it your point of sale? Is it a Finicity product or service? Is it another back-end service, right, that you're providing? Whatever that is, right? The main thing that you need to do in order to make the client successful with this is to make them aware. So with regard to digital verification, one of the things that we preach is you need to make sure that they're aware of what the digital verification process is, why they will want to use digital verification, right, for all of those reasons that we talked about in terms of value, and how to use their online banking credentials to become digitally verified. Now, we did some internal polling here, and we find that about 88% of the time, if you are making a borrower aware of what, why, and how for your digital solution, whether it be point of sale, again, run the whole gamut, people are going to be more comfortable using it, right? Now, that may go without saying, but the idea here is this. If in the case of digital verification, you haven't made the borrower aware that either in your point of sale or via email, you're going to be sending them some information about it, what's going to happen? Well, I think we all saw, right, whether or not you're very familiar with the verification process Finicity provides is a little irrelevant, but I think we all saw that there's a point in that short demo of the borrower experience where the borrower actually enters in their username and password. If the borrower isn't prepared for that, if they're not made aware that this is going to be going down, they're going to be very suspicious of it. I know that I would be, personally. But all it takes is a simple mention, right? That this is what's going to be happening, and the borrower suddenly knows what to expect. Expectations are so key, right? For some of us who are parents, I think we can speak to this a lot. If your kid's expecting to go to Disneyland and you take them to the park, it's a bad weekend. If your kid is expecting to do chores and you take them to the park, you've got it made in the shade, right? Make sure your borrower's expectations are aligned with the front end of going through this process. Make them aware of it. Best practice number 7, you actively prepare the client for the digital process. So this could mean a lot of different things. Broad view, if you're using a point of sale on that front end, right, you can make sure that the borrower is prepared for this by making sure that they have a working email, making sure that they are getting the invite to go through, making sure that they understand what it is that the point of sale is going to be asking them to do. If you're using a Finicity product or service, right, for example, we need to make sure that the borrower has an active online banking presence. Again, as we're pulling this data from tokenized access from their account utilizing their username and password, if they don't have a username and password, we can't help them, right? And that sort of is the idea. So we need to make sure from a preparedness standpoint from Finicity products and services that yes, they do have an active online banking presence. If you're looking at a verification of assets or income, right? You want to indicate to the borrower what types of accounts they should be searching for inside the tool. A borrower might not know. I know that when I was first going through the mortgage loan process, I didn't know that I could use my Roth IRA or 401k in order to count that as my asset information. We also have here that we want to ensure that the borrower knows their username and password for each of these accounts, because if they don't know that username and password, they can't have access to them. It's the basic idea that we're dealing with. And finally, best practice number 8, sort of the big one, that you preempt client concerns. The idea here is that you want to preemptively resolve borrower concerns, right? You want to indicate to them, if you're using point of sale or another digital solution, whatever those concerns may be, you want to try to beat them down ahead of time. Again, speaking to what we know here at Finicity with our digital solutions, right? We try to instill into the mind of the borrower that it uses the same bank level security found in top tier banks in the world, right? Hands down, we here at Finicity value security above all and consumer security above everything else. We have kind of been going at this for 20 years as a core data aggregator, and our main prerogative is to ensure that the borrower has secure data. We do so through a variety of different audits and with our partner clients as well. Again, so key, right, for Finicity products and services. If you were looking at the borrower experience for the first time, you may have recognized it. And the reason is, one of the things that we preach is that the borrower has likely done this process before. The borrower, if you ask the borrower, hey, have you ever used Google Pay or Apple Pay? Have you ever used Venmo or Zelle? Have you ever linked your account to Uber or Lyft, or even used TurboTax, right? Often enough, these apps are being used by clients and customers on a daily basis. And if they're using these, they should feel secure in using the Finicity process, because even though they might not remember, they linked their bank accounts in a very similar way to these products and services as they do with Finicity, right? So the key here is this. If you're not a Finicity client, you're saying, well, how do I apply this to me? Understand that if borrowers are using a digital process, right, make those parallels for them. Make those parallels for them. When I'm working on pitching, right, and coaching with loan officers about how to overcome objections for verification of assets or income, I'm talking to them and I'm saying, if you're talking to a borrower, simply ask the questions, hey, Miss Future Homeowner, do you have an online banking presence? Okay, great. Just out of curiosity, we can do this the old way, which is going to take a couple of days, or we can do this in a couple of minutes right now. Do you want to do this the fast way? Oh yeah, of course, everybody wants to do things fast. Great. Have you ever used Uber or Lyft? Have you ever purchased anything with PayPal or Google Pay or Apple Pay? Eventually someone's going to say, well, yeah, I use those all the time. Great. Well, that short process that I was talking about, it requires you to temporarily link your bank accounts, and then we'll be able to get that asset information. 9 times out of 10, a successful pitch with no other problems. Make those parallels, right, is the point. If you're using Finicity product or service, that's great. You can use that. If you're not, simply find what those parallels are for your own operating systems, for your digital shortcuts. Find those and then preach to them, right? Distill it down to the borrower on a level that they can understand. Because these services for you, they're part of your job. They make sense to you, but they might not make sense to the consumer. So find those parallels. Find your Google Pays or your Apple Pays and make those connections for your borrower in their attitudes. With regard to one of the things that we also preach to, when we're talking about sort of these examples for Finicity products and services, we're looking at providing access to view data and not to do anything else. We like to think of it like maybe looking at a window in a house, right? The way that our access works, and this is the way that we explain it. If the assets are sort of inside the house, all we're asking for is sort of a peek behind the curtains to view, to get a snapshot of what's in there, not to go in through the front door. One of the other things that is important when you're preaching a digital solution in terms of overcoming borrower objections is that it is, in fact, digital solutions are, in fact, more secure. Everything is encrypted, whereas email, fax, and paper, they aren't, right? that's just the whole idea. Fax is a Cold War technology. Email was developed in the 90s in order to facilitate communications. If you want to know how secure your email account is, check it. See how many spam emails you got just over the last 30 minutes that you were on this particular webinar, right? We know that there are problems with these types of technologies when it comes to encryption. So let the solutions, the digital solutions that are designed to be secure for your borrower, take front and center stage for them. With regard to something else, the last thing that we can say about how to preempt a concern for Finicity product and service, and this is wholly true as well for other products and services sort of within the mortgage loan space, banks have confidence in this process, in the Finicity process. We have connections with thousands upon thousands of banks. They use these tools for themselves, and many work with us to provide the service as safely and as simply as possible. The idea here is this, and quite simply put, if I'm looking at a borrower and they're having a concern with Finicity product or service, I simply say this: we've linked with your bank. We've linked with your Wells Fargo, your Chase, your community bank. They trust us to manage this connection for your neighbor, for your son, for your daughter, right? Let us manage this connection for you as well, right? Safe and secure. Again, just a couple of ways in which we can sort of preempt those borrower concerns. A couple of best practices, right, that we went over today. That is what I had prepared today for best practices. And I think, Kevin, do we have anything else?
Yeah, so just a couple things. If you guys want to toss some questions you have for Matt or for any of us in just kind of the Q&A or in the chat, we're happy to get to those and kind of stay on and answer them as we go. We will be passing along this video and a PDF of the slides probably tomorrow morning. And we'll be certainly happy to have any further conversations if you'd like. So that is that piece of it. Before we go, we do have one final poll question. What's your current time frame for implementing digital solutions? Just kind of see where everyone's at. The majority, well, 47% say in the next 6 months, right? So they're looking to move. Maybe they're coming out of COVID and kind of all the changes and looking to put some more things in place just in case, something else happens. 26% 6 to 12 months, 11% 12 to 18 months, and then no current plans is at 16%. So that is just kind of the planning phase, and that's what we like to see, at least, right? People wanting to move, people wanting to get these solutions up and running and working as fast as possible. So Bobby, you have anything you'd like to add before we wrap up with kind of Q&A?
Yeah, I think the main message here is, what we want to convey is we're here to support you, support your business, help you be successful, not just sell you a product. We want to sell you a partnership and ways that we can help you understand the market better, the industry, the trends, and just making sure that you're on top of what's available to your clients and that they can have a better customer experience, and that we can just help drive more loans and applications and revenue. That's our main goal here, is to help support you in doing those things. So like Kevin said, you'll get an email from us here probably tomorrow. Please respond back to us, set up a time where we can chat and maybe go through the products a little bit more in depth and answer some more questions, and just kind of make sure that we can help in that plan as you guys are moving towards that digital solution, that we can help you get there quicker and more successfully.
Great. I do see a couple questions streaming in, so if you want to stick around and you have questions for us, by all means, we'll kind of keep this open until they peter out. But I know this is mentioned in the chat, but first, can Finicity solutions be integrated with LOSs like Encompass? As Matt mentioned, not just LOSs, but POSs. So Encompass, Consumer Connect, Simple Nexus, to name a few. I'm playing favorites.
LQB.
Yeah.
Or Winning QB, I should say, not the abbreviated name, and a few others too.
If you have one we need to be looking at to get you up and running, by all means, we're happy to get into that with them as well. So, all right. And one previous one that was in the chat, Finicity is a Fannie Mae and Freddie Mac authorized report supplier for asset reports. So you just, even if you're just getting the PDF report, you can plug that ID in and it will be taken care of from there. But yeah, anything further? Okay, thank everyone. Thank you for your time. One final plug. We will be having a webinar next week, this same time, Thursday at noon, Mountain, 2 Eastern, with Ellie Mae and Waterstone Mortgage. Waterstone is has been nice enough to agree to kind of walk us through how they introduce their digital solutions. And they started a hybrid approach, I believe, back in November, and their fully digital mortgages will be happening this month. So they've made a lot of progress, even with everything that kind of COVID threw into their plans. So that should be a good webinar. We'll also include that registration link in the email tomorrow. So if you're interested in that, we look forward to seeing you again a week from today. But thanks. Have a good rest of your Thursday and a good fall weekend. So
Thanks, everybody.
Thanks,
Yeah.
everyone.